Staying on the CapEx issue, on the financing issue altogether, it's my great pleasure to introduce Meredith Annex. This corporation, Meredith, I just checked, is going into its 5th year next year, because it was 2019 when I visited the absolutely impressive Bloomberg New Energy Finance headquarters in London, and we started to think that it would make sense to report more about the heating sector, and you gladly picked up, and I'm very happy to have you here. Thank you very much for coming.
So delighted to be here. Panelists, come ahead on stage and join us. So I feel like this topic has come up quite a few times during all of the other sessions so far. So I'm very excited to be leading this, moderating this session with these experts on building a solid financial framework for the heat pump market. Now, we're going to be covering all areas and all aspects of the heat pump market. I've got people on this panel that are looking at industrial heat pumps, district heating, distributed systems for everything from apartments to single-family homes. So bear with us. We'll try to be clear around which type of market segment we're talking about at each point in time. So I am joined today by 3 panelists. Starting closest to me, this is Greg Gabriel. He's a senior energy specialist at the European Bank for Reconstruction and Development. Next to him, we've got, and please tell me if I pronounce this wrong, Csaba. Csaba.
For all the Hungarians, it's Csaba.
Csaba, who is the senior chairman and senior partner at EnerSafe Capital, with a very strong background in investment banking. And finally, we have Marco Baresi, who is the International Affairs and Marketing Director for Turbiden, a company of Mitsubishi Heavy Industries, with a particular focus across the industrial decarbonization space. Now, I want to start off, we've heard about financial frameworks a lot, and Csaba, I thought I would start with you to talk about why we might be hearing about this so much right now. I believe that we exchanged an email earlier, maybe it was earlier this week, maybe it was last week, discussing how the challenges around the higher energy prices in Europe from the past year around COVID have really put an particular importance on getting things off balance sheet.
Well, I think that we spoke about a lot of things here, but everybody is forgetting that every company, even the world, is having a balance sheet. And the balance sheet has got an end. So you might be thinking, and our banking friend is going to confirm that, I'm good for a certain amount of money to him. After that moment, he's not going to lend me anything further. Now, we had COVID, bankruptcies going up, empty offices going up, which means revenues falling for the real estate sector. What does that mean? An investment fund buys a building, goes to his banker and says, here, 20%, can you lend me 80%? The bank is going to say, okay, you look nice, you've got good tenants, okay, I give you the 80%. Suddenly, COVID arrives, unoccupied buildings, his revenues went from 10 million to 6 million, and now he needs to reposition his building. He goes back to his banker and says, listen, banker, are you willing to give me some money? The banker by now is rolling on the ground laughing. He said, you missed your interest rate payments, your building is down 50%, and you want me to lend you some money? No way. Now, the poor guy who owns the building is having a stranded asset. He can't sell it because ESG is kicking in, and the next buyer is going to say, well, I'm going to buy it at half price from you, which means that his investors are not going to be happy. So I think that the big problem we are always forgetting is that there is something out there which is called IFRS 16. IFRS 16 is the reporting under which all major funds and big companies need to report under. If you don't comply, if you need to add on debt to your balance sheet, and most of the solutions we talked about here are effectively adding debt to the balance sheet. which the balance sheet can't support. So I think that we need to understand that selling sustainability has got to do with three people: the CFO, he looks after the numbers, the plant manager or the real estate manager, and the sustainability manager. So these are the three people who will be buying the product. And Andy had very, very good comments earlier. As a service is one of the solutions of closing this loop.
So this is referring largely on the industrial side, on the commercial side.
As well as for the real estate sector.
As well as the real estate sector. And Greg, I guess if I could ask you to weigh in on behalf of the consumer sector. So if we just imagine the household, the house owner, would you say it's a similar story? I think it is from what we've been hearing at the conference today.
Yes, it certainly is. And maybe I'm not really shifting the focus, but I am going to emphasize the point that it is this upfront cost that we see, that we keep hearing this feedback about from individual consumers, that this is probably the number one obstacle that they view here. So where can financing help? An organization like ours, we're a rather large institution. It's difficult for us to access those individual consumers. We would certainly like to, but the transaction size, the associated costs, we aren't so efficient when it comes to these sorts of transactions. So what we can do is we can provide indirect finance there through local banks, through local intermediaries there who can then access that market. I don't know if I would call that off balance sheet for individual consumers. Much like you, I think of this more in the industrial and the commercial space. But I see this as addressing one of the principal obstacles there, which is financing. So we have had people on stage. We've had people talking about the heat pumps, the product themselves. Some people want to make the products more exciting. Some people want to get consumers excited about heat pumps, and I think market them better. But when it comes to financing of heat pumps for individual consumers, I think we need to go completely the other direction. We need to make it boring. So it shouldn't be that hard to make financing boring. But we need products that are very easily understood by consumers. So that take out the exotic nature of that aspect.
I've got a lot of thoughts on that one, but I want to make sure that we're bringing in Marco as well. So Marco, when you're looking at working with large industrial players or on industrial scale heat pumps around your markets, are you similarly seeing this need for off-balance sheet financing? I know that you and I also spoke about the need for innovation financing. I'm wondering if you could bring in that angle as well.
Yes, in principle, we have to make difference. We have spoken a lot here about the maturity of the domestic heat pump. Industrial heat pumps market is quite different because we need to set a specific project in layout and in industry, and there is not enough project, in my opinion, to make awareness. So we have to push in order to have more project. Giving a reply to your question, we have to operate, in my opinion, in different ranges. We need, from the industrial point of view, some grant or some money to develop research and development in order to create more efficient solution. On the other side, I remember, to give an idea, I remember years ago, before the explosion of the installation on renewable, I was in a workshop and I heard a statement from a guys after some presentation. It was less PowerPoint, more power plant. It is the same, in my opinion, can happen now. We have spoken a lot about the needs, about the finance, about the barriers for the industrial pumps. But currently, we need to install projects. We need to have instruments in order to push the installation. Why? Because we have to create awareness in the industrial player. And on the other side, we need to create volume in order to reduce the cost. The instruments are not simply, there are not magical instruments, but we can operate also in some specific fund in order to develop a cluster of projects, for example, in order to install projects in industry.
Mm-hmm. Are you finding that any sectors within the industrial space are moving faster for that type of cluster approach?
Specific sector, you told?
Yeah, like maybe there's an application that's moving faster.
Yes, we have seen a lot of interest in food and beverage, for example, sectors. We are operating in paper industry. Next year, we will put in operation our first plant in a paper industry in the north of Europe. In any case, we have two different approaches. The first one is related to the infrastructure, so the district heating, for example. Mm-hmm. And district heating is more familiar with industrial heat pumps. We are focusing in high temperature heat pumps, so is a sort of niche. On the other side, from the industry side, all the processes that have 200 degrees heat can be applied for a substitution with industrial heat pumps. Also chemicals, there are some specific sector of chemicals that could be applied for these kind of applications.
Mm-hmm. So we've talked about the need for innovation. It's an earlier technology. Each of those sections that you're talking about, each of those types of clients need a different product often, or a specific type of solution for their need. But on the other hand, you don't have to deal with quite the distributed base that those on the building side do. So how would you say the comparison is? What are the sort of things that make it easier or harder to create financial solutions on industry?
As Xara said, there are three main actors in industry that decide for investment. One is the CFO. You can operate on CapEx because industry wants to see a payback time of investment less than 3 years. So we have to operate in order to reduce the upfront cost with some specific tax reduction, for example, or some specific way to reduce the accountability of the project in the balance sheet. On the other side, we have to operate in order to reduce the OPEX. For example, last week I've seen the report of the PPAs mentioned by European Commission, the PPAs from renewables applied in Europe. We are talking about 7 to 8 gigawatt of renewable PPAs. That is nothing compared to the market needs. We have also to push to increase the PPAs in order to create a certainty of cost for the electricity. And also could help us some specific instruments returning to the CapEx in order to reduce for example, I don't know if you want to talk about the innovation fund at European level or so on, but it could be, for example, a specific instrument. I had the opportunity to be in the expert group since 2018. There was 3 calls, and for an amount of 1 billion the first call, 2 billion the second, and more than 3 billion the third call. At the end of the story, how many projects concerning heat pumps are financed in the innovation fund? Close to zero or very few. If you mention that Net Zero Industry Act must put in take into consideration the industrial heat pump as one 88 technologies, key technologies. We have to push in order, for example, to have a specific allocated money in the innovation fund for developed projects.
Yeah, go ahead. Sir. Yeah.
Thank you, Meredith. I was sitting a few years ago in your wonderful offices at Bloomberg in the City of London. And the head of the Green Bank walked in and had the most impressive speech. And he said, the widget manufacturer is not going to spend his money on getting better lighting. He will spend his money on getting better widget. If you go to him and bring him a lighting solution, then he's going to buy it. But you need to do it, you need to pay for it, and you need to maintain it. And with that, the gentleman went off stage, and I was sitting there and said to myself, he is so right. And you said something else, which is very important, Marco. Pipeline. In today's market, investors have money. So money is not the issue. The problem is that we are going to this young man here and say, I've got a heat pump to finance, it's $1 billion, will you going to look at me? He can't. We need to be serious. The volume, I was speaking to the EIB Monday at lunch. They have shifted from 50 million pipeline to 100 million pipeline. Why? They ain't got the people. One of my favorite investors, sitting at a major fund in Switzerland, he's now working in framework agreements. Come to me with 25 million pipeline, I can help you. Don't come to me with 500,000. So it is the industry's task not to go to the guy and say, would you buy this from me? Bring him a new solution. As a service is out there. We spoke about it here. Tell him it doesn't cost you anything. Suddenly the finance director is on board. The sustainability director is anyhow on board because he's ticking any of the ESG things. And the plant manager is on board because he anyhow doesn't understand what you're trying to sell him. We are speaking about black boxes, we are speaking about heat pumps, we are speaking about combined solutions. But the poor guy, he has grown up in a diesel age. So these are the main issues. We can finance everything very fast. We just need to have a more comprehensive approach so that Greg doesn't sit in his office and say, well, I would love to talk to these people. They are nice guys, but they're coming with too little bit of product. So it's the industry, and we have developed something which is a white label solution for clients like yourself who have got no idea of finance, and we do everything for you. All we want is that this transition happens. How we do it doesn't matter. We just need to get there and bring new ideas, new business models, which are easily financeable.
So, Greg, is that true? Are you not getting the project pipeline you want to see?
Well, also, in my defense, yeah, I'm not the man saying no. That's the risk. That's the risk officer.
Yeah, Greg likes to remind people that he's the engineer in the bank.
I'm not a banker. But size is certainly important, and I was emphasizing that in terms of individual consumers, but it's also if we look at commercial and industrial consumers. So if we want to finance things directly, that is through loans, through potential equity, through something funny called quasi-equity, we need size of a certain kind. And generally, 10 million or more we would like to see. But if we want to go for these smaller projects, which there will be many, which we would like to support, we need to look at other kinds of instruments. We need to look at the use of these intermediaries that I was describing, which we would like to see increased activity in this area. We'd like to see new products, those boring products I described, come forward. But we also have the ability to support these through capital markets. And now this may sound a bit exotic, but this is where certain investments are packaged together into, be it a bond, a mortgage, an instrument that has a green label on it that ourselves and other institutions can more easily invest in.
So let's talk about some of those. What currently is coming your way that hits that 10 million threshold that you're looking for? Is that district heating? Is that commercial property, industry?
So we have done in terms of heating and cooling work within the bank, we can support industrial clients, that widget maker who more likely they're using a lot of energy to make their widgets, so they're a bit more interested in energy efficient solutions. But also, there is on the infrastructure side, we have district heating utilities, we have owners of buildings, owners of property companies, owners of the built environment. So for those district heating utilities, it's normally quite easy to hit that mark. I'm very pleased that our pipeline includes some large-scale heat pump investments that, fingers crossed, in a non-EU country, we will be signing a deal for a package of large heat pump investments before year end. We have building energy efficiency investments as well, which aren't strictly labeled as heat pump investments, but a number of them include decommissioning of fossil fuel-based heating systems and replacement with heat pumps. And that can either be through, and those direct instruments, the nature of the industries I'm talking about, some of these are public sector, but some of these are private sector as well. And when we deal with a private sector utility, it's much easier for us if they come to us with a package or a plan for investments, because when somebody puts together a single investment, perhaps in a special purpose vehicle arrangement, we do have to do quite a bit of work in the background to prepare that loan, get past those bad guys I was describing, the risk officers. And
Yeah.
But a group together is great for us.
Now, let's talk about this, because that is the challenge when you're talking about the residential side, right? If we're starting to go to the residential, you need, as a financial institution, to get that scale. And EBRD, EIB, these companies are not going to go knocking door to door and building up a portfolio of 10 million homes. But a utility could. We've mentioned a property owner, a real estate developer potentially could. Obviously, none of you guys sit in those roles, but could you help us to sort of speculate what makes it easier or harder, right? How could they be more involved? Why do we think we're not seeing that as an easy solution right now?
Well, this gentleman, it's all his fault. He doesn't go out and doesn't sell a product, but because he's not looking at it from a financial side. Greg very well described it. Come to investors with pipeline. Think big, because Greg is going to be very happy, and the guy at the EIB extremely happy, and we are going to be happy because we've got product to sell. If you come with a pipeline of 45,000 apartments in Germany, even if it's social housing, there is a way of structuring it. 45,000 times God knows how many thousand per heat pump, suddenly this is an investment product with which I can go and see a few investors. The biggest issue today, and all of you need to understand the financial industry, these are silos. I was recently talking to a client in the UK, lighting project, and the fund we were talking to could only do London-based lighting. He couldn't do the Midlands, it's 200 miles away. So it is silos, and we need to satisfy the silos. If we don't have product, and I've got a very nice friend in Paris, sits on 3 billion assets. His manager comes in and says, listen, I've heard something about ESG. I don't know what it is, but why don't we put 10% asset allocation into this? Suddenly, the poor fund manager has got a 300 million asset allocation issue. He can't get the product. So your boilers or your heat pumps need to end up in a financial product into which probably Greg can be a cornerstone shareholder, because if he has done his due diligence, everybody on earth is going to jump in and is going to invest, because either the EIB, painful as they are, the EBRD, not as painful and do more of Central Europe, but if they've done the due diligence, everybody sits there and says, cool, the big boys did the due diligence. And suddenly you can do 100 million. And this is what is needed. So
Marco,
think big, dream big.
to be fair on you, you're not selling to the residential sector, but maybe you can talk a response to
In fact,
Csava's
residential
comments.
sector is more simple, as I explained. But there are two main barriers, in my opinion. The first one is related to the industrial processes. I'm a manufacturer, so I am a manufacturer of equipment. I have to change the mind and also think different business model, of course. But if I apply, and I give you an example, an energy pump in an industrial steel factory, I have to be sure that in the next 5 years, 10 years, they repay the investment. So the business continuity of this industrial is key for me, because I need to be guaranteed that they still continue, and they repay the investment. And this is one of the key issues, because we need a guarantee scheme, a sort of insurance scheme or guarantee scheme at European level or national level in order to guarantee that. Because my business is to manufacture, not to... I'm in a different business. I'm not in the steel business, in the cement business, in the glass or
We
paper.
see similar challenges in the PPA market for electricity, right? The creditworthiness of the off-taker matters a lot when you're looking at a 15, 20-year agreement. Granted, you're talking 3 to 4, but even now in Europe, with the volatility that we're seeing in the market, that is hard.
Of course. And the second barrier, let me be more provocative. In the last 10 years, energy-intensive industries, our customers, receive money from government in order to reduce the bill. At the beginning was to make competitiveness, to maintain competitiveness and to avoid carbon leakage. Currently, they receive a lot of money. We have an account from Bruegel about 800 billion euros spent at European level to reduce the bill from industrial and domestic. It is an enormous amount of money. But there is no direct link between this money spent and energy efficiency investment. There is no mandatory obligation to do energy efficiency investment in the industrial sector. And so the role of policy in this sense could be relevant for the next time in order to, yes, of course, there are energy management systems that introduce some investment. But if you don't link the money you spend to reduce the bill and the energy efficiency investment, in my opinion, there is a sort of missing link.
And bringing that over to the residential side, I guess, Greg, I know that a lot of the policy uncertainty that's been talked about so far has been in markets that EBRD is not active in, Germany, UK. Mm-hmm. But how does policy certainty come into play with your ability to offer a financing package? Well,
it is all about generating a market for us. But we are a bit of a unique institution in that we're not necessarily a household name. Some of you might be here wondering who is the EBRD. So you can't get a mortgage from us normally. But we're a multilateral development bank. So we have a different mission and objective. Sure, we lend money. We want it back with interest. But we also want to improve the environment, and our official mission is to ensure a transition to democratic, market-oriented economies where we work. So alongside the work that we do lending money, we can also do policy engagement. So it's good to see positive policies in place, but we work with policymakers in the countries that we work in to bring in what we feel are positive policy examples outside of the EU. We work with them to bring in relevant EU legislation. But we also want to see some of these instruments to help create these markets for positive things that we want to fund, such as heat pumps come in. So we haven't had a great deal of success yet on doing this with heat pumps. A number of the instruments that Commissioner Simpson talked about coming forward, we are working with our partners in the near community to transpose those instruments, but policy absolutely plays a big part in doing this. Some of this is subsidy policy. But yeah, free money is good. Cheap money is also good. And we also have a guarantee scheme, actually, supported by the EU that it means that we can lend funds. It's become much more relevant as interest rates have gone up. We can lend funds at a much lower rate, which for certain instruments guaranteed by the EU, which we're already seeing interest in and hoping it generates more positive energy.
I'd imagine across all of these different types of client segments, the upfront cost in the energy bill is pretty essential for being able to achieve the scale that the financial community is looking for, right? So if you're going to be in a situation where you don't have the right gas price ratio and you've got less subsidy certainty, does it become harder to achieve the levels of scale? Like what types of products, I guess, become harder or easier to deliver from a financial solutions perspective in this type of environment?
Well,
all of them.
all of yeah. I mean, I'm probably not going to be the first person on stage here today to say, yes, we need to move the burden of tax off of the polluting fuel onto electricity, which, by the way, already has the cost built in through the EU ETS. So that makes it, this does make it tremendously difficult. The analysis that we've been doing in-house, we see that for some markets where that ratio is too large, it's simply a no-go for certain heat pump projects. And even in some markets where there is a rather small ratio, a rather close gas and electricity price, the due diligence shows fantastic outcomes. It shows lower costs of heat from new heat pump, I'm referring to large-scale heat pumps from new plants than existing fully depreciated fossil plant. But then we have a whole other set of barriers with some decision makers and people who are still skeptical about the technology, unfortunately.
Yeah. Marco and Shava, anything you'd add to this?
Yes, it's exactly what you say. This is why we need to have projects in operation. So we need to boost and to have cluster of projects in order to make awareness that technology is there, is available, and also that it is an efficient way to replace some old fossil boilers or so on.
Yeah.
Some people can't get over boilers.
Seems it.
Well, there's one more piece of bad news, and I think that Thomas is going to hate himself for having invited me. There's something out there in the big world which is called EU taxonomy. Now, the big banks need to report on the greening of their portfolio. Basic banking, any kind of loan is supported by capital. If it's a sovereign government bond, you need to put a little capital behind it. If suddenly this is a riskier investment, you need to have more capital behind it. If the asset which used to be before EU taxonomy was non-risky and became suddenly risky, the bank needs to put more capital behind it. So if we want to shut down the banking sector, then we just need to walk out of here, never install a heat pump anymore, because a lot of stranded assets will be out there. Stranded assets need more capital, which then means that banks can't lend for their core business. They are just supporting old projects, and that's not where we want to get to. So everybody who is in manufacturing, please think in what investors need. Pipeline, as you mentioned it. You mentioned pipeline. Big projects. Think big. Bundle projects of similar quality, of similar contractual agreements. And the great thing on the as a service, when you were talking about, well, will he be in business in 5 years down the road? You actually can take the equipment and walk off with it because it's your equipment. So there are business models to satisfy everybody, I fully understand. And that's why people in the manufacturing industry should team up with financiers. You are great in manufacturing. Other people are great in financing. We should stick to what we do best. Bring in the people, bring in the experts. There are oodles of funds out there who would be happy to work with industry. They just don't see the size.
Can I say something about the taxonomy? And I apologize. Yes. I apologize because, yeah, I mentioned people want to market heat pumps differently. Taxonomy really clearly had no marketing budget whatsoever. It is as dull and as boring as it sounds. But it is, I think that for the heat pump industry, it's actually a very helpful tool there to leverage some money to go into that, because I encourage everybody in this room, I would give you a homework assignment, is to look up the EU taxonomy compass online and look up the criteria for heat pumps. And it's very easy for your products to meet this criteria that's in there. And there was a lot of fuss made about including gas in the taxonomy. But if you look at the fine print about what was written for including gas in the taxonomy, it's, in my opinion, practically impossible to actually meet that criteria. So this can be a very positive enabler for you to attract finance in the heat pump area.
So we started 10 minutes late, which means I'm going to let us go a little bit over, if that's okay. I'm getting the okay. So in the audience, if you guys have questions, put your hands up. I'll get some microphones over to you. I'm going to keep going at the panel for another minute or two, but then I'll start looking out for anybody with questions. Greg, I'm sticking with you for a second. You listed out a whole host of products that I imagine half the people in this room have heard of and half haven't. You mentioned loans and equity, which I'm assuming most people are relatively familiar with. Mm-hmm. But then you also mentioned quasi-equity. You mentioned bonds and mortgages, capital markets. Could you give an example or two of what a heat pump product would look like in those?
Yes, please don't make me explain quasi-equity.
Okay, we can go with the bonds, because that's more online with the taxonomy anyway.
Yep. So the way an institution like ours can be involved in bonds is that we could have an entity that needs financing, and they can, rather than come and get financing from a bank, a pure bank loan like ours, they can put together an instrument that they put out to capital markets called a bond. We all know government bonds. But then the nature of this is that rather than the bank explicitly deciding the interest rate of that loan, the market decides the rate of that bond, the return, the coupon on that bond. And then, depending on the size, there's often a secondary market where bonds can be traded. So within that bond, it could be a single organization. It could be a heat pump manufacturer that wants capital to expand their operations. It could be a property owner that wants to green their portfolio, and then maybe that would be a green bond, which also may allow them to attract financing at a lower rate because it achieves that certification. And our institution, we can be involved in helping to structure that, or we can actually purchase, but in a way that encourages others to participate, other institutions, but doesn't crowd them out. So I hope that was my brief explanation of a bond and green bond.
Marco, at Turbine, does that sound like something that you'd be able to use on industrial heat pump applications?
Sorry?
I'm wondering on the industrial heat pump side of things, this is an area where you would have companies on the industrial side, large food makers, large chemicals players that are used to raising their own green bonds and green capital. Are you seeing interest in using that type of financing?
Yes, could be, of course, an interesting option. What we can do is to operate. EBRD operate in some areas, specific areas in Europe and not overall Europe. But we can operate also with EAB, with this kind of, in my opinion, could
And it's
be.
fair to say also that larger private institutions also do this type of work as well, to be fair.
Yes.
It's not all government-backed or semi-government-backed groups that do this type of financing. How are we on any audience questions that have come up? Anyone?
It's because I said taxonomy.
It is because we said taxonomy, which is very fair. Okay, we've got one over there. I've got a couple more that I can ask as well.
Thank you. This is Dolph with Atmos Zero. Could you elaborate a little bit on the differences between a solar or wind PPA and a heat pump, heat as a service contract? What would be the main, the key differences there?
I can take the PPA side if you guys want to start with the heat as a service side.
In my opinion, the main difference is in PV, you have fixed other way. If you have to apply heat pump in industrial player, you have the business continuity as a variable that is not defined. So the main difference between solar PV that could be considered as a sort of is very similar to a loan for buildings, for example. On the other side, from the industrial side, if you consider the application of heat pump, you have to consider that could be some risky, and so the insurance scheme, for example, could be an additional items to add to the heat as a service, because I have to guarantee that the repayment of the investment will be done.
Saba, any other thoughts you'd want to add? I can weigh in as well, though.
Well, we have developed on the launch, which is a EU-funded project, helped by roughly 13 billion of capital sitting at the table, an off-balance sheet contract, which is securitizable. We've worked together with BNP Paribas. NSF Capital was the workpiece leader. We've got it in 12 jurisdictions, and it is basically a standardized product, a little bit like your car loan or car leasing thing. You go to BMW and you tell them, I would like to have a 7 Series with pink stripes and yellow, and for a certain amount of money they're going to do it. If you, however, tell them that you want to change the leasing contract or the financing contract, they are going to say, go to Mercedes, because we won't do it. So what you need is a very standardized contract, which gives very clear rules. Then you're having a central piece, which is actually the monetary output. I give you this, and that's how much you pay for it. And then you jump into remedies, which, if something goes haywire, how are you going to correct it? So the big difference between the power purchase and the as a service is that it is having a sort of fixed amount of energy or whatever output you've got, which the client and offtake agreement, with a premium to be paid if it exceeds, and the floor under which it never can fall into. Because otherwise your bankers are going to say, well, that ain't working. So it's roughly 100% is what the client says. I need X, Y, Z steam, cold, lighting. Then you've got something, if he is having a great year and he's producing more, he's going to be 15, 20% above. he pays an additional price with a little bit of a premium. And if it then, for whatever reason, he's having a hard time, he's falling onto, let's call it 80%, and he will always need to pay those 80%. Very similar if he would own the equipment.
Is the principle of contract for difference.
Absolutely.
Yes.
And what I'd say here is with the PPAs, when PPAs started in renewables, you probably heard a very similar story of, well, we don't have any standard contract. We don't have a lawyer who can really understand this and figure out what the risk is to our company as the buyer and our company as the seller. That has evolved over time because you had a group like the RE100, right? So you had a major group that came together, brought together the largest electricity consumers within the corporate space, and set out a target to have 100% power purchase agreement backed contracts. Now, there are changes happening within the PPA market as well. You know, right now you're having a move towards 24/7 power purchase agreements, which are incredibly hard, probably bring in some of the complexities that you see on the heat side as well. Just because it is very difficult to figure out when you're going to be consuming something and how to create a renewable generation profile that matches that. When you're looking at the heating sector, it's a bit more complicated than power, right? Because with power, is the electron there, is it not there? Usually it's a virtual system, you're gonna get the power anyway. And so what you care about is the cost of your power purchase agreement with the solar or the wind farm relative to the power price. And my clients on the clean power side will hate me for saying it, but at least we've got a traded wholesale power price that I can compare that to. And probably a lot of them should have thought about inflation earlier. That was the thing that's catching them all off guard right now. On the heat side, you've got multiple variables, right? It's not just the temperature of the delivery. There's other factors that you need to be thinking about as well. Those need to be guaranteed. And then what is the market that you're replacing, right? Because it used to be presumably the natural gas that was purchased to create the steam. But that's not one for one with what you're doing with the heat pump anymore. Sometimes that heat pump's using, I know we're not calling it waste heat anymore, ancillary heat, whatever it was that we said yesterday, right? But then you still have a natural gas price exposure. Sometimes it's, you know, you could match it off the wholesale electricity price, but that might not match what you're actually paying at your industrial site. Maybe you want to match it to the product that you're producing instead, but then you have other exposure. So it becomes a lot harder to figure out what you're benchmarking against. The risk in terms of stranded asset, we talked about you can recover the technology in theory. In practice, that's actually really hard. You know, it's a big, heavy piece of equipment. If I'm building a solar and a wind farm and you renege on your contract, I'm a little bit screwed at first, but I'll find another buyer, right? It will be hard on me, absolutely, but there will be someone else who will buy a PPA off of my product in the future. I can't guarantee that for the industrial heat pump that I just installed. So there are real challenges there. And I think those will resolve, right? I think that we will discover ways to reuse components. We'll discover ways to set a sort of standard strike price as we're talking about this within these contracts, but you need scale and you need that kind of standard PPA contract for thermal heat. And we're just not there yet. I think we're likely at a tipping point where that's starting. Because as we heard yesterday, as a lot of people have said, the corporates that have 2030 net zero targets have figured out the electricity side because it was done earlier. Now they have no choice but to turn to thermal heat, and you're going to start seeing these really large players that have that scale that this panel's been talking about coming in looking for those types of contracts. How are we on time? I think that was a really thorough question, so we'll leave it there, not keep you all from lunch any further. Please join me in thanking my amazing panel over here, Greg, Marco, Shaba. This is fantastic.
Thank you. Nice stuff. And thank you.
Thank you, Meredith. Had anybody ever told me that I would miss a lunch over discussing taxonomy, I would have said, oh my God. And most of you probably didn't hear the term before. It's 700 pages, so good luck on this homework assignment.